So this is a bullish pin bar. So if this is found at a good location, it's a good support, all right, at a very good reliable support. All right, it is not in every location that you see this pin bar that it's reliable for you to place your trade. No, but when it appears as a very good reliable support, along with other indicators that you use, to confirm your trading setup, then you can place your trade. But it must appear on a good, or it must appear at a very good location.
Hello everyone, how are you today? Welcome once again to Online Money with Peter. Trust you are doing great. Alright, today in continuation of our candlestick analysis, we are to be looking at another very good candlestick pattern, which is pin bar. If you have not watched the first episode of this candlestick analysis, I'm going to drop the link in the description, or at the end of this video, maybe 10 minutes to the end of this video, you're going to see pop up on the screen. Click on it and then watch it. Alright, so today, as I said, we're going to be looking at pin bar. Alright, trading pin bar is very key, alright, especially if you know how to trade it. So we are going to analyze it, and I believe that at the end of this video, you are going to see pin bar candlestick pattern as a very important candlestick pattern when it comes to trading. Alright, thank you very much for stopping by once again, and let's continue.
Alright, so this is a pin bar. Alright, this is a bullish pin bar, and this is a bearish pin bar. Alright, so but we are going to start with the bullish pin bar. Alright, now for a pin bar, it usually looks like this. Sometimes the body may be smaller than this, maybe very small, very thin here. Sometimes it's like this, but some people call this a hammer. Alright, you can call it a hammer if you so wish, but I call it a pin bar, as we can see here, the pin bar candlestick. Alright, now this is the psychology behind the formation of this candlestick. Alright, now for a bullish candlestick, alright, we know very well that the price usually opens at the bottom here, right? Price opens here, alright, yes. For a bullish candlestick pattern, the price opens here and then closes here. Like my previous video, I told you this, that the price of a bullish candlestick usually opens at the bottom and closes at the top. Same way with the bullish pin bar. Alright, the price opens at this level and then close at this price here. Opens at this price, then close at this price. And this is a wick here, the small wick here. This is a wick, upper wick, and this is a long wick here. Alright, so now what is the psychology behind the formation of this pin bar? Now, for a pin bar, the price opens here, and then before the close of the day, now let's assume that this is our daily candlestick. Right, at the beginning of the day, the price opened here, and of course there will be interaction between the buyers and the sellers. So the price got to this point. When it opened here, the price was going up and down, and then the price got to this price, to this long wick here, this place here at the tip here, and then the sellers and then the buyers push the price. Now it was the sellers that pushed the price to this point. The sellers were so strong that they pushed the price to this point, and when it got to this price, the buyers came in with full strength and pushed the price up, and then it closed here. Now this body, alright, is I would say the opening price. Sometimes the opening price and the closing price are the same. Alright, sometimes the opening price and the closing price are not the same, but the body is small, very small. But usually for a pin bar, the opening price and the closing price are the same. Alright, but sometimes there'll just be a little difference between the opening price and the closing price. Now the pin bar usually has a long tail and a small body and a little wick on top of it. Sometimes you will not see any wick, sometimes you won't see any wick, depending on the interaction between the buyers and the sellers. All right, so this small wick at the top shows that the price got to this point. All right, the buyers pushed the price to this price, then before it came down and closed here. All right, and this long wick shows that the sellers actually pushed the price to this point, and then the buyers came in, pushed price, and then it closed at that point. Now, assuming, of course, this is a daily candlestick, or at the end of the day, the price is either the opening price and the closing price are the same, or there's just a little difference, between the opening and the closing price. And then we have a long wick at the bottom, like this. What does that tell us? It tells us that at the end of the day, it was the buyers that had the day. It was the buyer that won. The strength of the buyers was very, very strong. All right. So if at the end of the day, the closing day, at the end of the trading sessions for the day, the buyers won, now what do you think is going to happen the next day? It means that there are 70 to 80% probability that the price will continue to go up the next day. All right, going by the long wick here that you can see at the bottom. All right, now this is called the pin bar because it looks like a pin. A pin has a small body at the top, a small top, and then a long tail, just as it is here, and that's why it is called the pin bar. So this is a bullish pin bar. So if this is found at a good location, it's a good support, all right, at a very good reliable support. All right, it is not in every location that you see this pin bar that it's reliable for you to place your trade. No, but when it appears as a very, very good reliable support, along with other indicators that you use, to confirm your trading setup, then you can place your trade. But it must appear on a good, or it must appear at a very good location. All right, I hope you understand the psychology behind the formation of this bullish pin bar. All right, now for a bearish pin bar, it's just the opposite of this bullish pin bar. Now this is a bearish pin bar, and of course we know that for a bearish pin bar, the price opens at the top and then closes at the bottom. Opening price, closing price. And sometimes the closing price and the opening price are the same. All right, and of course, again, sometimes there's just a little difference between the opening price and the closing price, and therefore we have a small body. All right, so again, the psychology behind the formation of this pin bar is that when the price opens here, again, there are interactions between the buyers and the sellers. All right, so when it opens here, the buyers came in, and then before the close of the day, the price will be going up and down, and at the end of the day, the price now what close at this. All right, the candlestick close at this price. It opened here, the buyers push the price to this point, this wick here. All right, the sellers came again, push the price down to the small wick here. Eventually, at the end of the day, the price closed here. Now we can see this long tail at the top of it, and this long tail is very, very significant when it comes to your trading decisions. Very, very important. All right, now this long wick here signifies that the bearers had the day. The bearers were strong. At the end of the day, the strength of the bearers the strength of the sellers, or the bears was strong. All right, so at the end of the day, if the strength of the strength of the sellers is very, very strong, it means that the following day is the sellers or the bears that are going to push the price down again. All right, I don't know whether we understand this thing. All right, so this is the wick. We have a long wick. All right, and this long wick signifies the strength of the sellers. The buyers push the price to this price here. Then the sellers came in and pushed the price down to this wick, and eventually it closed here. So at the close of the trading session for the day, it was the sellers that won, going by this long wick here. All right, so if this candlestick appears on a good resistance, a good location, all right, and ideally the market should be trending down. It must be on a trending market. downward trending market. All right, now when it corrects to a resistance and this appears on the resistance, very good location, then you can place your trade. All right, but if the resistance is not reliable, all right, so you have to be patient until you have a reliable resistance. As we go on, I'm going to show you some of the features or characteristics of a reliable resistance or the characteristics of a reliable support. All right, so I'm going to show it to you so that when you see this appearing on the resistance, and then because of what had happened previously, you will know whether the resistance is reliable or not. All right, and you also use other indicators as well to confirm your trading decision. All right, there is no candlestick formation, there's no candlestick pattern of formation that is isolated from other indicators. All right, of course you would always want to confirm when you see a good trading setup. Of course, you want to confirm to be sure that the trading setup you're seeing is reliable. All right, so this pin bar should be seen on a reliable resistance before you can place your trade. All right, so that is the psychology behind the formation of this bullish pin bar and this bearish pin bar. Now let us look at an example on the chart and see what I'm saying. Okay, so all right, so let's start with bullish pin bar. Now, like I said previously, it must be on an uptrend. All right, for a bullish pin bar to be reliable, it must be on an uptrend. Okay, so let's assume that this candlestick chart you can see in here is on an uptrend, and then of course when it's trending, it will not continue to trend forever. It's going to correct or retrace to a support, then continue trending up. Again, when it's trending up, of course it will not trend forever. It's going to correct to a support, and from that support then it will start going up again. All right, the forex market, when it's trending, it goes like a wave pattern. You see higher highs and higher lows. All right, so when I'm talking about the different types of market conditions, then I'll explain better to you how to identify a trending market, an uptrend or the downtrend. I'm going to explain it better to you. All right, so when you see that to trade this pin bar, when you see that it's on an uptrend and then it corrects to a support, a reliable support, and then this pin bar is formed around this support area, all right, after the close of this pin bar and the opening and the next one of the next candlestick. Now when the next candlestick opens and then it goes above, just a little cents above this wick here, then a trade can be placed here depending on your trading pattern, and then your stop loss would be here, just a little bit below this wick here. All right, you take your trade a few cents above this wick here, then your stop loss will be a few cents below this wick, and then of course depending on your risk to reward ratio, then your profits you can ride the trend and take your profit where you want to take your profit. But ideally you should have a profit ratio like say 1:2 or 1.5 reward ratio. All right, as it is, we have on this chart, we can see that it's correct to a support, and then it bounces on the support and start going to the upside. All right, so for a bearish pin bar, all right, all right, of course it's going to be on ideally it should be on a downtrend. All right, when it's coming down and then it corrects to resistance, and then this pin bar is formed on a resistance. All right, you can see the sellers push the price down here on this resistance. When you look at the previous candlesticks before this one, you will find that you will know whether this support, this resistance here is reliable or not. All right, so we can see here, all right, after this pin bar is formed, the next candlestick few cents above this wick here, then the trade can be placed, then stop loss will be placed here. All right, then your profit can be, your according to your risk to reward, 1 to 1.5 or 1 to 2 ratio. All right, so that is how you can actually analyze this pin bar and then place your trade. Of course, don't ever trade the pin bar in isolation of other indicators. You must confirm before you place your trade. You must ensure that the resistance is a strong and reliable resistance before you place your trade. And don't just place your trade immediately after the close of the pin bar. You must wait for the opening of the next candlesticks, and the next candlestick goes above, little cents above this wick of this pin bar. Then you can place your trade. The stop loss will be here, a few cents above, and your profit can be, of course, your 1 to 1.5 or 1 to 2 ratio. All right, so that is the psychology behind the formation of this candlestick and how you can trade it. All right, so at this point, if you have not already subscribed to Online Money with Peter, I admonish you to please subscribe to my channel so that subsequently, as I upload more of these videos on how to make money online, you'll be one of the first individuals to get notified. And also, if you want to have more tutorial understanding on how to trade forex and to be a consistent, profitable forex trader, then become a member, and all the videos that you need to trade profitably and be making consistently will be given to you. All right, thank you very much.